Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
Donald Trump, of course, I just said off air, probably has the attention span of a 5-year-old, where one day he's worried about Canadian dairy farmers, the day before that it's North Korea, the day before that throws a few missiles at Syria. It looks like he doesn't have any long-term plans. He just goes around putting out little bushfires.
Yeah, and you would think the financial markets would be a little more spooked by that level of inconsistency from the biggest economy and the military superpower of the world, but they don't seem to be. Stocks are trending down a little bit in the U.S., but not excessively, and the bond markets are behaving pretty calmly and everything, which is a little bizarre when you think that we've got, quote-unquote, an armada sailing to North Korea, and we're considering shooting down their test launches if they try to launch any more missiles, and we're bombing parts of Syria that have Russian advisors there on the ground and everything, and threatening the usual trade war and border control kinds of things. But no, the markets seem basically pretty calm about this, which could be that they're looking ahead to the inevitable reaction of the world's central banks to any kind of a crisis, which will be massive currency devaluation and more QE, blah, blah, blah. They're going to have to respond with easier money if some kind of a crisis breaks out. So from the financial markets standpoint, a crisis is one of those bad news is good news things, unless it's an existential crisis where there's nuclear weapons flying around. But before, beyond that, or up to that point, if it results in easier money, maybe it's a buy the dip event. That's all I can conclude from this, because you would think in normal times people would be a lot more spooked than they are by what's emanating from the U.S. and from the politics in a lot of the rest of the world. The French election alone should be worth, 1,000 points off the Dow. When you think about the fact that Marine Le Pen, who was supposed to win the first round and then lose the second round, might end up in the first round of voting now against a communist, so that you've got the far-right candidate and the far-left candidate in the runoff for the presidency of the second biggest economy in the Eurozone, with the mainstream candidates on the sidelines watching. That's a very scary prospect for the Euro and for the European Union. If one or the other, the people who are, now guaranteed to win the presidency, are opposed to those institutions. Same thing, though. The markets don't seem to be unduly spooked by that new prospect. What I'm referring to is the rise in the polls of a communist candidate in France who did really well in the recent debates and is now a close fourth. He's within striking distance of getting into the runoff, which goes to the top two candidates. So very interesting times, Jim. And always a lot of material. That's the one upside to a crazy world like this, is that there's never a shortage of stuff for you and me to talk about. We can go on for hours about all the insane events out in the world, and then lament the fact that they're not showing up in the financial markets the way they ought to.
Of course, people would say, how crazy is it in France, a fascist up against a communist? A year and a half ago, people laughed when someone said, maybe Donald Trump will be president.
Well, see, that's the thing. Brexit and Donald Trump were supposed to be highly unlikely events that, the mainstream was never going to let happen, and they happened. Voters surprised the pollsters and they surprised the mainstream media. So now we're kind of almost expecting the polls to turn out to be wrong in elections going forward. And we're kind of expecting people to vote for populist candidates in ways that the polls don't show until polling day, until election day. And so suddenly it's become easily conceivable that Marine Le Pen is the next president of France, or that she loses to a communist in the runoff. Stuff like that isn't out of the range of possibility anymore because we've seen some other crazy stuff happen just recently. And the reason that stuff like that is becoming common is that we screwed up our finances, as you and I have talked about numerous times before. When you borrow too much money, things spin out of control, whether you're an individual or a country. And all the major countries of the world have spent the last 30 years borrowing way too much money. And now we're at the point where it seems like things are spinning out of control for pretty much everybody. And the big systems don't work anymore. Voters don't feel like they're getting what they should be getting from their governments. Therefore, they're willing to vote for outsiders. And outsiders are coming along to fill that vacuum with a lot of really interesting ideas about how to tear the system out by the roots and implant something new. So that's why politics is seemingly as crazy as finance now, because they're really part of the same spectrum. You screw up your finances, you screw up your politics, and then your politics in turn screw up finances further. So you get a feedback loop. In good times, improving one or the other helps improve the whole system, and you get a virtuous cycle where one gets better and that helps the other get better. Well, we're in the opposite now, where one part of the system is perverted, and then that perverts the other part, which in turn feeds back to the first part. So finance is making politics crazy. Politics is in turn making finance crazy, which will make politics even crazier. And that's our next 10 years, Jim. We have a really, really interesting time ahead of us, and I think anybody listening to this, anybody who's paying attention out there, should be firmly focused on how to protect themselves from what is sure to be, at a minimum, volatility and very possibly absolute chaos in the next few years.
We'll have more with John Rubino right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with John Rubino. John, is the British Prime Minister taking a real crapshoot here by calling an early election for June, considering that everything else has gone against the trends? She thinks she's just going to roll over Labour because they're disorganized. But what about the people? They are not predictable. They're like herding cats now.
Yeah, any election is an inherently scary prospect for the mainstream these days just because of recent history. Voters aren't in a mood to put the same people back in power when the system seems screwed up, because the guys in power get blamed for that. In Britain, it's kind of a special case because the process of implementing Brexit has not gone smoothly internally. And that's because a lot of the smaller players, but still influential players, are opposed to it one way or another, or want to do it in a way that isn't consistent with what the people in charge, what the Conservative Party would like to do right now. And so the Conservatives are going to try to wipe out the opposition in the next election. And they think they've got a chance at it because the Labour Party has been captured by the far left, which doesn't draw majority-level votes in elections. And the Liberal Party in Britain is fairly weak also. And so the Conservatives think they've got a decent chance of giving themselves an unassailable majority, which will let them just implement Brexit the way they want to do it. And if it doesn't work, Theresa May, the Prime Minister, was never in favor of Brexit in the first place. So it's possible that she wouldn't be crushed if voters came out and voted against a clean, simple, straightforward Brexit, because she never really wanted that to begin with. So, again, things aren't clear anymore. Things are extremely messy politically everywhere. And you get all these cross currents because the stuff that used to work doesn't work, and we don't know what to replace it with. And Britain is a pretty good example of that. They're extremely deeply indebted. And that debt is making it hard to get anything done that's actually tangible. You know, that actually results in jobs and good future prospects for 50% of the voters. It used to be easy to do that. You borrow a bunch of money, you spend it, build some roads, increase a few entitlement programs, and boom, you get 51% of the vote. Well, now you borrow a bunch of money, and you get no new jobs, and you get frustration on the part of the people who aren't beneficiaries of the entitlement programs because they see it getting bigger and people getting benefits when their wages aren't going up. And so you actually lose votes. You end up with 48% instead of 51% if you borrow a bunch of money and spend it. And then you saddle your successor with even greater instability because they have to do something about all this new debt that you took on that didn't produce anything of value. So that's our world now. And it also leads to big asset bubbles because you're creating all this new currency to deal with the debt that you took on in the past. And that money doesn't go to old, stodgy sectors where a lot of people might be hired. It flows into hot markets where the prices are already going up. And, you know, I think Canadian real estate probably qualifies as one of those bubble markets now. I just saw that Toronto's real estate prices went up by 30% in just the last year. So, Jim, as you like to say, if it doesn't happen in Toronto, it's not real for Canadians. Well, it's happening in Toronto now. So you guys have a real estate bubble.
Well, Vancouver's bubble.
Crazy finance.
Yes, Vancouver's bubble peaked a year ago, and prices have been coming down since then. The government in British Columbia put a foreign buyers tax on Greater Vancouver, but prices and sales were already down. They'll take credit for that, but they didn't do it. As they always say, the biggest cure for high prices is high prices. It just gets to a point where nobody can afford it, nobody buys for 6 months, see what happens to prices.
Yeah. That is how bubbles burst. People just run out of steam because they can't afford the average house with the average salary. And plus, I think a lot of the hot money just leapfrogged over Vancouver when it became less attractive because of the rule changes, and then flowed into Toronto. Because Canada is seen as a stable place. It's a good place to hide out with your capital when the rest of the world is spinning out of control. So you guys benefit from the fact that China has a credit bubble going on now that's bursting, and rich Chinese want to get their money out of the country. The U.S. is doing a lot of really erratic things around the world, and you know our economy is not in that great a shape either. Although we're partially benefiting from the flows of hot money because you know Seattle real estate is going crazy and San Francisco real estate. That's in part because of the tech sector booming, and in part because a lot of Chinese and Russian money flowing in as those two countries try to sort out their political and financial messes. But Canada might be the biggest beneficiary in the world right now of hot money flows. And make no mistake, that's not a good thing. You know, small countries can be swamped by global capital flows just because there's so much paper out there that's been created in the last 30, 40 years that it dwarfs the economies of all but the very biggest countries. even Japan couldn't handle a huge inflow of hot money. And forget it if it hits someplace like Brazil, which is still suffering from the effects of the last round of hot money. And so now you guys have to deal with something like that. And it's going to be interesting to see how it plays out, because there isn't a tried and true method for keeping hot money inflows from causing chaos. Nobody's figured out a cookbook way of doing it where you implement this, this, and this, and then you sit back and relax while, the system rights itself. It doesn't work that way, because capital is tricky. It finds ways around rules if it wants to go somewhere, and still goes there and bids up prices and causes chaos, and then it pulls back out, and then it crashes prices. So hopefully Canada avoids that boom and bust cycle. But you're certainly in the boom cycle now in Toronto.
We'll have more with John Rubino right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with John Rubino. Canada is used to boom and bust economies. Look at Alberta. Price of oil goes down into the 20s. They lay off 500,000 people. Prices are back up. They hired the most people last month. But boom and bust, that's been Canada. And frankly, we're trying to find a way not to have to go through this. But what do you do when you're a natural resource economy and you have a federal government that doesn't acknowledge that Vancouver, like San Francisco and Seattle, is a huge technology center? But do they get any help from the federal government? Of course not. Unless it's happening in Toronto, it's not happening. And Toronto's all financial. It's all banking. High tech to them is, using your iPhone to do your banking, but they don't realize that the programming for that was developed in Vancouver. So. Yeah.
Well, the times I've been in Vancouver, it's a great city. If I had to leave where I'm living now, Vancouver would be at the top of the list for places to go. So I think it's doing okay. Sometimes being ignored by the central government is better than having its attention. So it's possible that, the 2,000 miles between Vancouver and Toronto is a good thing for Vancouver.
Oh, we know that. There was a survey done once by Canadian Press that found 70% of Canadians would move to Vancouver if they could afford it. And the thing is, because they are moving here.
Yeah, it's a gorgeous city with a lot of stuff right nearby. You got a beach. You have an actual nice beach in your city limits, right?
Yes, Vancouver is mostly beach.
Yeah, that's pretty rare for a Manhattan style city, because you've got all the other stuff that go with being a big, vibrant city, but you've also got a lot of outdoor stuff too. So anyhow, we're talking me into moving up there, Jim. You have a couch that I can sleep on while I look for.
I was going to say I'll get my real estate license and retire, and how much commission I get from selling you a house.
There you go.
So, at least now we're getting international attention because stuff is happening in Toronto. But what about other sectors like energy? Is oil going to make a comeback, or is it just going to stay around the $50 mark forever?
Yeah, oil is a really unpredictable market, isn't it? Because it has these huge runs that don't seem to have any point to them, and then it crashes again. Basically, just when when Saudi Arabia claims it's going to cut its output, or something that doesn't even have a real-world effect yet. But I don't know. I think oil is going to fluctuate until solar power takes over the energy world, or at least solar and wind together. So I think the long-term trend in all forms of fossil fuels is down. but I don't know what's going to happen in the next few years. What we're seeing now in solar is it going exponential. It's really accelerating its spread around the world. California had a few hours in a day in March when it got 50% of its electricity from solar power. That's astounding for an energy source that was less than 1% of global power generation very, very recently. And now it's 50% of California on a hot, sunny day. So give us good batteries that allow places like California or Arizona or Nevada to store their excess sunny day electricity and use it at night. And there's no reason for fossil fuels at all in a place like that. You can use your solar power to charge your electric car, and you can be completely off the fossil fuels grid. And I think sunny parts of the world are heading in that direction, and heading that way exponentially based on the recent numbers. So longer term, oil is threatened by that. Shorter term, in the coming decade, oil is still going to trade based on the fact that the vast majority of the world's cars use oil, and that the petrochemical industry is still big and vibrant. Things like that are going to dominate the oil price calculation. And I don't know what that means as far as where we go from $50 a barrel, because, you've got big new producers coming online. You've got new technologies that allow you to extract, for instance, shale oil and fracking technologies that let you get natural gas that is a competitor with oil. And those things are inherently unpredictable because you don't know how much better people are going to get at these new high-tech extraction methodologies. And you also don't know what the politics of the Middle East are going to be. We could see easily a war between a coalition led by Saudi Arabia versus a coalition led by Iran that disrupts the supply of oil from the Middle East. And, that's the kind of thing that's always on the front burner in the Middle East, and never more so than today. So it's incredibly hard to predict what's going to happen in the energy markets. And I think if you're a trader, all you can really do is buy the extreme dips and sell the spikes and hope that it stays within a $30 to $80 range, which it mostly has over the past, 3 or 4 years. So that's probably all you can do, and just don't worry about the fundamentals, because the fundamentals are inherently unpredictable.
Well, I watched a pretty good discussion today about bubbles, and they said when there was the high-tech bubble in the 2000s, it fell 60%. Other areas, energy, the price of oil dropped 60%. Can we expect over-expensive housing in Toronto to drop 60% in a very fast period?
Yes. The short answer is, oh yeah. When something is going up as fast as Toronto housing, it creates air pockets. So if something triples in a reasonably short period of time without some serious fundamental change happening, then it can drop by 50% easily from that point of tripling and still be up if you were in it 10 years before, and that's the housing market now. People used to say, the housing market has never fallen at a national level since the Great Depression, and then it fell on a national level in the U.S., and you don't hear that anymore. But you are starting to hear, housing prices always go up, from people with no sense of history. That's usually a sign of a top. So I wouldn't call the top in the Toronto market, because there's a lot of stuff going on around the world that's sending hot money scurrying in different directions, and some of it might continue to flow into Canadian real estate. But I think in terms of fundamentals, that is affordability. In other words, what does the average income buy you in terms of housing in your market? And if the average income doesn't even come close to buying the average house, you're at a point where most of the action is going to be on the downside for a while.
Well, Vancouver's come to the point where it really is a place, I don't know what you call it, a luxurious resort where you have very expensive homes, foreign money. The people who work in Vancouver can't afford to live there. something like only 12 or 17% of Vancouver police officers can afford to actually live in the city that they police.
Well, see, that's what happens in hot real estate markets, because if you're part of basically, the support staff, the teachers and the firefighters and the cops, who are absolutely essential to the quality of life in a city, but all this outside money is coming in and bidding up the price of housing, how do you live there? How do you live where you work? And commuting really isn't an option in these big cities beyond a certain point. An hour's commute each day, each way, almost ruins your life right there. That makes life really hard. And if it's more than that, if it's an hour and a half or 2 hours, then why in the world would you be, a New York City cop or a Vancouver teacher when you've got the skills to be that same thing in a place where you can drive 15 minutes to get to work?
And get paid the same.
Yeah, relative to your expenses, you get paid the same. You might make a little less money, but your cost of living is so low that your lifestyle is the same. And that's the thing that big, expensive cities face all the time. But when their real estate shoots up into bubble territory, that totally exacerbates the problem, because it makes it literally impossible for an awful lot of people to live where they work. And that makes it impossible to get good people doing those jobs, without raising their salaries to the point where it busts your city budget. And then you have all these pension crises and stuff that you also see in big cities. Look at Chicago. They're going bankrupt trying to pay the pensions for the cops and the teachers and the firefighters, because they gave them really generous pensions as a way to keep them in the city, and now it's blowing up in their faces. So yeah, that's a city planning conundrum that I don't think has any kind of a fix in a world of free-flowing global capital.
Well, don't forget, politicians work on an election cycle. As long as they get reelected in 4 years, they don't care what they do. They're not looking 10 or 20 or 50 years down the road, because they have no intention to be in office then. They expect to have cushy board jobs for the corporations they helped out while they were elected.
Yeah, which explains a lot of the problems of the world. The short-sighted worldview of people who stand for election every 2 years or 4 years means that you get overinflated pensions, because that's a great way to buy votes, is you increase somebody's pension payout 30 years from now. And don't worry about the future, because you're not going to be there. But then, there's a saying from John Maynard Keynes, the famous economist, that in the long run we're all dead. And that's I'm sure he was misquoted, because he's usually misquoted. He usually says things that are much more sensible, and then people take it out of context and use it to bludgeon him. So I'm not going to blame him for this. He probably was misquoted in some way or taken out of context. But his saying that in the long run we're all dead is really destructive, because we end up living in the long run of the people that came before us. And so, yeah, they're dead, but we're trying to pay the bills from the checks that they wrote way back when. So that's the big unsung problem in the U.S., for instance, is pension obligations that can't be covered. And I think that's going to be one of the catalysts that cause the next financial crisis, when there's a even modest downturn in stock and bond prices. You're going to see a lot of pension funds that have only been kept afloat by soaring stock and bond prices of the past 20 years just blow up. And those blow-ups are going to spook everybody and possibly lead to a much, much bigger downturn in financial asset prices. So, I don't know. You can approach today's world from almost any angle. Public finances, city planning, monetary policy, fiscal policy, foreign policy, geopolitics, and it's all really scary. There are huge problems out there in every aspect of every major society that aren't being fixed and that can cause incredible troubles going forward. So, there's going to be a lot to talk about, but a lot of it is going to be extremely unpleasant, unless you're a hardcore gold bug sitting there watching your gold and silver go up while all this happens. I think that's going to be one of the only classes of people going forward that find the next 10 years in any way enjoyable.
John, I know we could talk forever. You have to go. I have to go. We'll continue this conversation. Thanks a lot for being on the show.
Thanks, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. If you have any questions for John or for us, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.